Hi, folks. How are you today? Okay. So, happy Wednesday to everybody, and thank you for showing up today at 10 a.m. Yeah, my name is Bob Stolack. You may have seen me before, or you may not. I'm the president of the Senior Circuit Group. I'm located in Boca Raton, Florida, not in front of Yankee Stadium, although that's quite a picture behind me. I'm sure you'll all agree. The we meet every Wednesday, every 2 weeks on a Wednesday at 10 o'clock, and we answer a question. Okay, we're in the life settlement business, and again, a life settlement is the sale of an unwanted, unneeded, or unaffordable life insurance policy that, quite frankly, a senior, the reason they bought it has changed. And instead of giving it back to the insurance company for the one and only offer they think they have on the table, in a lot of cases, we're able to produce many offers for them from vetted institutional buyers who are interested in buying their policy, and they put it into their portfolio, into the investor's portfolio, and they pay real, serious cash for these in certain cases. Okay, so here's the thing: if you're able to have something, an unknown asset, wouldn't you want to find out what the value of it is before you let it go, or even while you still have it? If you knew your refrigerator was worth $50,000, I'm bringing up, an absurd comparison here, but wouldn't you want to know that before you, maybe after it broke down, and before you traded it in for nothing, where you can perhaps get something for it? That's sort of what this is, though. It's a there's no the insurance company's not going to tell you that there are investors out there that will buy your life insurance and pay you a lot more money than they will, and what they will is the cash surrender value, which is in a lot of cases nothing, for your policy. So we're here to educate people that this does exist. This is real. This is regulated. And quite frankly, it's very exciting because we're saving people's retirements with this. We're putting grandkids through college through this because their grandparents now have extra monies that they didn't know existed, that they could do these wonderful things for. And in some cases, they're also paying for their own long-term care that they didn't take out a policy to protect themselves against when they were younger, and now they need care. So there are many reasons for this here, and it's a I consider it a very proud, and I consider it a very big opportunity for the people that I represent, you my clients here, of being able to unfold this to you, as far as that, this unknown asset. Let's get to today's question, though. And today's question is, what if I change my mind about selling? Is there any penalty? So, about 25 years ago, when this first started out, and it was called viatical settlements, and people needed 24 months or less to live, which is what definition of a viatical settlement is. It was sort of the Wild West. So there weren't many rules, if any. Okay? And as time went on, as most things that stay and don't go by the wayside, it becomes regulated, and because people need rules, you need to have a regulatory system that controls this, so people are not taken advantage of. And we see this in a lot of other areas, and you see this, especially today in the cryptocurrency arena. There'll be a lot more rules and regulations coming in on that too, as this really becomes a mainstay and a true reality, from now and in the future. So this is a very regulated industry, and one of the rules they put in was that if a person sells their policy, and this is state regulated, so this differs from state to state. But in most states, you have between 15 and 30 days to be able to, once you sell your policy and you are funded, okay, so you have the money, it's in your account, whatever that number is that you accepted for the purchase. You have generally between 15 and 30 days, different states, different amount of days, to be able to rescind the policy. And what I mean by that is, or for whatever, you don't have to have a good reason or a bad reason. If you decide that you changed your mind, then all you have to do is, let us know, and you'd have to, of course, give back the money to the buyer, and it would go back to the way it was. Now, in doing this for numbers of years now, I have not had one person that has rescinded because they usually know what they want to do prior to, and they generally, in my cases all the time, stick to it. But what I like about it is that, let's say you did sell your policy, and now you have the money, for the policy, and unfortunately, let's say during that rescission period, the insured passes away. Okay. Now remember, when you sell your policy, you're getting a percentage of the death benefit. You're not getting the full death benefit because there has to be a remainder there for the buyer to want to pay the ongoing premium for, and they will get when the insured passes. So if the insured, though, happens to die during that rescission period, the family and the beneficiaries certainly will get, even if some of the money was spent, they're certainly going to put the money together to give back to the new buyer, a new owner of the policy, so they could be put in that original position, because then they would get the full death benefit. Let me give you an example by numbers. Let's say you have a $500,000 policy, and let's say you life settled it, and again, I'm just putting numbers out there. Let's say you life settled it for $80,000. And during the rescission period time, the insured and the owner could be the same person. A lot of cases it is, but also in many cases it is not. But let's say the insured passes during that rescission period. Okay, so the owner, okay, if it's, and or the family who's there, if the owner's the insured, so they're not here anymore, but that the group, the family base, would put together the funds, give it back to the investor, and now they would get the full $500,000 as their on the death benefit. So I like that because that's an additional safeguard for my client, that if something, heaven forbid, happens during that period of time, then they would get the full death benefit rather than the percentage. Again, that has not happened during my course here, but you know what? If you're in the business long enough, over time, I guess all things happen. So it is an additional safeguard. So the answer to the question is, there is no penalty if you change your mind, okay, during that rescission period. After the rescission period goes, then it's a deal completed. Okay, it's a final deal, and there is no turning back after that. But again, this is a hidden asset. The big thing in this here is that, for me, is that so many people who turn in their policies never realize, so they don't feel bad about it because they never realize how much that policy was actually worth. I have case after case, which I can give you an example, of people going to turn in their policies for zero. There was no cash at all in the policies. I have one case where they got $500,000. I have another case where they got $200,000. I have another case where they got $57,000. All different numbers, but they would have gotten nothing if they didn't know this existed. We're here to help you. We're here to do a free appraisal of your policy. If you have any interest in this, call me 561-251-8680, or visit my website at sellmypolicy4more.com. That's sellmypolicy, the number 4 more.com. It's really my pleasure to educate people about this. Everyone loves this topic. Okay, it doesn't work for everyone because not every policy is sellable, but we won't know that unless you call and we give a quick analyze it in a quick way. It does not take long. And thank you, Andreas. And you can get a free policy review, see how much your policy is worth, and you might be very surprised. So I'm located in Boca Raton, Florida. I deal with people all over the country, and I'd be happy to work with you. Again, 561-251-8680. I hope these Facebook Lives are informative, and please reach out. And until next time, see ya. Have a great week.